How's it going, everybody? It is Dennis, and we're back with another video. And today, as you can see on the screen, we're going to be talking about YMAX or YieldMax new ETF, or not so new. It's been a couple weeks, like 2-3 weeks. YMAX. Now, what are we going to be talking about today about YMAX? We're going to be talking about my estimates for the distributions, my predictions for where this ETF is going to go, and is this ETF a buy? Of course, before we begin, this is not financial advice. I'm not a financial advisor. Do not take this as financial advice. This is just a video about my opinion and my overview on it. So let's begin. YMAX. What is YMAX? Well, this is an ETF that YieldMax has created that invests in all of YieldMax ETFs, and, well, besides itself, invest in all YieldMax ETFs. Exactly how much is this? What is it, 18 of it? 18? Yeah, I think so. 18, 17, whatever it says. But around that amount. So this is all YieldMax ETFs, and these are the YieldMax ETFs that it invests in. Of course, at the moment, we have no dividend. At the moment, in February, we did not get a dividend, so March should be a juicy dividend, but also a biased dividend, if you could call it that, because we're going to be getting February income going into March income. So there's going to be a little bit more than what you would usually get. But let's go ahead and get straight into it. Of course, we know that YieldMax has announced its dividends, and if you haven't been keeping up to it, you could check on their Twitter, on their website. They posted their dividends for the month of February. But we're going to go ahead and get into the ETF itself and my analysis, my opinion on the YMAX ETF. First off, the ETFs that are in the YMAX ETF, yes, I know there's a lot of ETFs, is AIYY, AMDY, AMZY, APLY, CONY, DISO, VB, GUI, JPMO, MRNY, MSFO, NEFLY, NVDY, OR, PP, SQY, TSLY, and ZOMO. Yes, a lot of ETFs. Of course, it's all their ETFs invested into YMAX. Now, looking just before we even get into it, this looks like a pretty good ETF. And we're going to get into it, why I think that, with just looking from the outside into it. Of course, distribution rates, like I said, they've been posted. I'm not going to go over all of them, but these are all the distribution rates for all the ETFs. The most important part is, of course, let's go over my rating. So for AIYY, I'm on this ETF, and this is, of course, a rating of the underlying. Before I even begin, this is a rating of the underlying stock of the ETF, not the ETF itself. Of course, the ETF depends on the underlying. If the underlying is bad, then the ETF is kind of bad, because you kind of have to believe in the underlying to invest in the ETF, but that's a whole different story. But my rating on AIYY is that it's okay? It's don't see it long term. AMDY, it's okay. AMZY, it's pretty good, it's hot. AMZY, long term, good yields, pretty good. APLY, long term, good yields. CONY's mid, depending where Bitcoin goes with the Bitcoin ETFs and all that stuff. Depending where Bitcoin goes, if the volatility is up, CONY could be a mid. Maybe it could even be an okay, depending where it goes. Of course, we don't know yet. April's coming up with the halving. We'll see where it goes from there. DISO is okay. VB, GUI, long term, hot, amazing. JPMO is okay. It stays leveled. Doesn't really jump them down much, so it doesn't have a lot of volatility, doesn't have a lot of premium, but you know that it's going to stay at the same value, which I don't know if it's a great thing for an ETF that pays you, right? A dividend, which comes out of your NAV. You kind of want it to grow, but it's okay. It's okay. MRNY is of course, it's a health stock. I don't really like health stocks. mRNA, I don't like health stocks. So I would say that's an MSFO, hot. Microsoft underlying, long-term play. NEFLY's okay. NVIDIA's okay. NVIDIA feels overpriced. So is AMD. So is a lot of these tech stocks at the moment. They're kind of playing to the AI game. We might be in an AI bubble. Who knows? But that's a different topic. OARC is OARC, obviously the ETF itself is kind of bad. And ARC Investments in itself, it kind of invests a lot into all these other stocks. So take how you might. It's a kind of PP, of course, it's okay. It's a finance stock. It stays balanced. It jumps up and down. Of course, now it fell after its earnings report, I think it was, or something like that. And it kind of fell, but it did jump up too as well. So it's okay. SQY is mid. It's a finance stock. TSLY is hot, in my opinion. Underlying Tesla, think it has ways to go. AI, all that stuff. You know, I made a video about it. It will be in the top right corner. But it's a hot stock, in my opinion. Other people might put it on or even mid. But Zomo, finally, mid, oil, gas, you know, stuff like that. But, of course, and then we also have stock space, tech retail, all that stuff. You guys could take a look at it, pause the video, take a look at it yourself. But that's just all the space that the stocks are in. It might be wrong on some of them, but whatever. Estimated distribution is what we're going to be looking at right now, though. The estimated distribution of all these ETFs, and this is what YMAX might be paying if it paid in February. If it paid in February, this is what the estimated distribution would be. 68 cents. 68 cents. It's pretty good. Of course, the NAV of the ETF is $20.75 of closing. As we can see, it closed at $20.75, meaning our monthly distribution percentage would have been 3.28%, or the yearly distribution of 39.40%. Yeah, that is pretty good for an ETF that has all ETFs, which has then other underlying stocks. Of course, you know, that's how it works. But that's pretty good. Of course, are we going to get that? Probably not. Probably not. I might be completely wrong. All I did was kind of average all the different dividends into one. Is it going to be that? I doubt it. But if it was 68 cents, it would be pretty good. Would it be around 50 cents? Maybe. I think it could be around 50 cents. Of course, that'll be a little bit less. But 50 cents is plausible. 50 cents is plausible. But even for that, if we go over to YMAX Growth, my little YMAX Growth area, and I misspelled monthly. Look at that. Oh, there. Let me just fix this real quick. Okay. Yeah, but the YMAX first month returns, as we can see, it hasn't been a full month yet, but it has been 5.34%. 5.34%. Of course, this is not a lot of information to go off. It could change drastically. We're in a bull market, just letting everybody know we are in a bull market technically. S&P 500 is about to hit highs, crazy highs. It's been hitting new highs every single day or week. And it's about to go over 500 for SPY ETF. But the average monthly return is 5.34. Monthly dividend return is 3.28, as we can see, 3.28. Of course, when you get your dividend payout, it is negative, subtracted from your NAV. So your total NAV growth, if you take the cash and run, would be 2.06%. So even when you take your cash out, the original, say you put $1,000 in, your original $1,000 would have grown by 2.06%, and you would have taken 3.28% home. Not bad. And your total yearly NAV growth would have been 24.68. I think it's pretty good. This looks pretty good. You can see right here, SPY growth is only 12.51% on average. SPY dividend yield is 1.34. You're beating the S&P 500. You're getting higher dividends. And if this continues, which I think it might, this is pretty good. Now, why do I think it'll continue? Well, because you have all these ETFs and you have all those underlying stocks, right? We do have a lot of tech stocks. We know tech stocks are overvalued. I guess it depends on who you speak to, but I believe they're overvalued due to AI. AI is everywhere. AI is everything. It is overvalued. But since you have so many YieldMax ETFs, since you have so many underlying stocks, and you have somewhat diversified stock spaces, right? You have finance, crypto, tech, one health stock, one oil stock, and a couple, two entertainment stocks. They are kind of diverse, and even the tech stocks, they're in their own space, right? Tesla is in car markets. You have, You have NVDY and AMDY that are in their chip market. AIYY is doing AI stuff. Apple is doing all the phone stuff. GUI is doing the, Google. Facebook's doing their stuff too with everything like that. So everybody's doing their own thing. So they're kind of separated. They're not all in the single space. I guess tech is a single space, but you know what I mean. They're all separated on some kind of level. So they're decently diversified. They're all invested, like roughly, I think it's like 4 to 5% invested in each ETF, 4 to 5, 6% invested in each ETF, and they have some cash as well. So you're diversified. You have a diversified portfolio, meaning if, say, one day CONY has a bad dividend payout because volatility dropped, the other ETFs will hold it up. Say AMDY drops, the other ETFs will hold it up. Say NVDY drops, the other ETFs will hold it up. And the same goes the other way. Say a couple of these drop, the others will go up. And that's how YieldMax ETFs work, right? If one sector or one underlying has a bad week, a month, another one might have a good month. Therefore, they will sort of balance each other out. Of course, like any YieldMax ETFs, you will have bad months where this NAV distribution is not 3.28%. It might be a little bit less, might be a little bit more. The growth might be a little bit less, might be a little bit more, right? That's just how these ETFs are. But what you do have is you sort of have security. Of course, in every ETF, and once again, not financial advice, but every ETF is not secure. Every ETF has its risk, and so does this. But it's a little less risk than, say, if you were to invest in TSLY itself. As we know, TSLY has dropped its NAV significantly. I'm invested in TSLY. A lot of people are not able to invest into a stock like that and be able to watch their NAV erode and lose value, right? Even though they're getting dividend payouts, it's coming out of their original investment and they cannot take it. Just the negative numbers does not work with them. But if you invest into a YieldMax ETF like this, what we can see for now, of course, for now, it's only been a month. A lot of YieldMax ETFs start off like this. They do really well the first month or two, and then they start dropping, right? But for now, what we can see is the YieldMax ETF is doing pretty well, right? YMAX is doing pretty well. It's growing by 5.34%, and if it continues to grow like that, we're beating our dividend monthly distribution, so we're continuing to grow even after distribution. So when we have the 68 cents canceled out of the NAV, we will still have a profit on our original amount. So, and if you don't reinvest, of course, then you keep the cash and you keep the growth that you had. So you lower your risk. You have a great amount of diversity, which is what lowers the risk and also gives you more diverse portfolio and more dividends and stuff like that. You have stocks with low volatility, such as JPMO, Zomo. You have stocks with high volatility, such as CONY, AMDY, NVDY, TSLY, right? So you diversify in 3 different ways, right? In stock space, in distributions, and volatility, all that sorts, right? So you have 3 different ways of diversity. You have a pretty good estimated distribution, which of course is estimated by me. This is not what it's going to be. And of course, the first time we're going to get a distribution in March is going to be a little bit high because we have the February income and the January income included into the March. So it's going to be a little bit high. Don't expect that to be all the time unless they do something amazing. And if the NAV keeps growing by 2.06% after distribution, this could end up being one of YMAX's better ETFs. And if the payout for YMAX in March, it's close to 68 cents. If it's at 60, even if it's at 55, maybe even if it's at 50 cents, depending where the NAV is itself, this looks like a possible buy. If, of course, it is at that point. If the monthly distribution is under 2%, I don't think it's worth it. Well, of course, in the growth, it might be, but this is not a growth stock. This is a yield stock, YieldMax. You're trying to get the best dividends, the best income. So we'll see. I think this might be a buy. This might be a buy. Just going based off my estimate, of course. I don't know if this is going to even work like that. Will they take it out of dividends? I don't know. I didn't look at the perspective. I'm not reading through all of that. But I'm assuming that they're going to be taken out of dividends. Just my assumption. And if that's the case, this looks pretty good. So, yeah. I don't know what you guys think. I personally, you guys can comment down in the comments, but I personally think this could be a good buy. Beats SPY on dividends on growth as of right now. And as of what I'm estimating for the rest of the year, if it continues this growth and if it gets this dividend, which I averaged out it to be. The distribution looks good based on my average. The ETF growth, the NAV ETF growth for the past less than a month is pretty good. Of course, we're in a bull market. Don't forget, bull market stuff is overvalued, blah, blah, blah. Typical stock market stuff. And the monthly distribution rate, if it's at 3.28% or 39.40% a year, pretty good. You have the diversity, somewhat security, different stocks, different underlying stocks for each ETF could, help you out in down market. Say techs are down, finance is up, you're still solid. You say tech is up, finance is down, you're still solid. I don't know if entertainment and health and oil could keep you up, but who knows? But yeah, I think YieldMax ETF could possibly be a good buy. I'll be waiting for March see what happens, see what the distribution is for YMAX. And if it ends up being good, and if it ends up being close to that number, like I said, if it ends up being close to 68 cents, I think this could be a good buy. And I think this could be maybe one of YieldMax ETF's most famous ETFs. But we'll see. We will see where it goes, because everybody said that with TSLY, but look where TSLY is now. Everybody's scared. Everybody's selling. Oh no, Tesla's falling. But that's a different video. Thank you everybody so much for watching. That has been me, Dennis, and that has been my overview on YMAX. And we'll see what happens in March. I'll be making a video in March if they release the distribution in March. Hopefully they do. I'll be making a video on that and seeing if it matched up to all this data. If it matched up to this estimated distribution, of course, it might be even a little bit more because we have the January income included as well. But yeah, thank you everybody so much for watching. I'm going to be keeping track on the growth and the dividends that come out in March. And I'll be coming out with another video. But thank you everybody so much for watching. I want to hear you guys' opinions on if you're going to be YMAX and if you think this is going to be a possible gem or diamond in the roughs for YieldMax ETF. So thanks so much, and I'll see you guys in the next one. Bye.